Good day traders, welcome back to the Forex Board Trading Academy. In this video we'll look at the Australian dollar versus the Canadian dollar and of course the price perspective for the coming weeks. But before we get started, I would like to remind you that information in this video is for educational purpose only and should not be considered as the financial advice. As usual, click that subscribe button and the notification bell not to miss any of the videos that we do on the weekly basis. So let's get started. So this is the daily time frame, and what we see, guys, is the clear uptrend. There was this move to the upside, which was a first initial wave up, and what we see is the break above the previously made high. So this was the breakout, suggesting that the trend could be changing. And here was also a massive resistance to moving averages 50 simple and 50 exponential. There was this resistance, got broken. After that, price went up. It tested 0.97 area, and then what we had is this consolidation, and finally we had an A, B and C corrective pattern. This is based of course on the Elliott wave theory. After this correction, price yet again started to move up, produced a new higher high and tested 0.9898 high, so almost 0.99 psychological level. But after it tested this high, yet again what we saw is an A, B and C corrective move down. So this is the potential, of course, because price could be breaking down. But as of yet, it seems like it's an ABC where we did reject both moving averages, simple and exponential moving average with a period of 50. Also, we bounced off the previous area of resistance near 0.97. So this was the rejection of massive support or massive demand area. And after this rejection, price produced a new higher high. So basically we saw this new high above the wave B. So this could be the continuation of an uptrend. It's obviously safer to go with the trend rather than to catch a falling knife and go against the trend. So what we also have is the simple uptrend trend line. We also bounce off this trend line. From the current point, there could be this consolidation to move towards the trend line yet again and then move to the upside. But at the same time, price could be going up from today or tomorrow as well. This is the daily time frame, so obviously it might take 2, 3 or 4 weeks for this move. So overall the move could be as much as 260 pips. This is based on the resistance that we have on this chart. Now, speaking of resistance, if we go to the weekly time frame, we have this fibs applied to this move to the downside. So this was the last strong wave to the downside, and we have several fibs, important levels to watch. So back to the daily, and here we have 61.8 fibs, which we had a bounce from. Then we're having 78.6 fibs, and there was the daily break and close above this level. And for this reason, we might assume that the price will move towards the 88.6 Fibonacci resistance area, which is near 1.01 psychological level. Slightly lower, but most likely if it will be testing this area, it will hit 1.01 psychological level. But on the other hand, we need to consider that on the weekly chart, there was this rejection of the 78.6% fibs. So there is certainly some selling pressure forming. We saw this bounce yet again here. There was no break and close above this resistance area on the weekly chart. There was on the daily, not on the weekly. And this means that it's still a little risky to buy, but the probability still remains in favor of the uptrend continuation. Obviously, if price breaks below this key support, it will invalidate the potential bullish scenario, and then we might be seeing actually correction down to 61.8 yet again, because this is the very strong demand area, and as long as it holds, we should expect the continuation of the upside move. So this is pretty strong uptrend, and going with the trend is always safer than trying to go against the trend. And now let's move back to previously made analysis, and we will start probably with the New Zealand dollar against the Canadian dollar, which is the most correlated pair to the Australian CAD. And on the New Zealand Canadian, we had a similar overview that the price is likely to move up. So from this point onwards, we are kind of expecting 460 pip move. But on the Australian against the Canadian, it's only 260. Maybe the price will not hit the resistance, although we still expect the upside move to continue. Here we have the support at 0.9 psychological level, and as long as it holds, we should be having the upside move. Currently we can see that there is this decline, but it could be providing a buying opportunity. So let's see what will be happening. Moving on, dollar Swiss franc. Well, here we did expect that the price is likely to test the trend line at some point in time before the downtrend continues. So it still is a consolidation phase, although it seems like we had ABC correction, now maybe a double top, and then finally we will be seeing a further decline. Pound Swiss franc nearly testing the second resistance. So finally we're approaching the second resistance, and this has been lasting for quite some time. We shared this idea when the price was at 1.1950 area. So we're already having this strong 500 pip move, and there is not so much to go towards the second resistance. The pound against the dollar, also this one of our oldest ideas. We are expecting the move to the upside to continue due to the dollar weakness mainly, but at the same time it could be the pound strength. And the price you can see moving within the ascending channel and could be reaching this target by April. On the Australian against the dollar, what we have is break above the bullish flag, and now we might be finding the support right at the breakout point of the flag. So this is where the price is right now. So maybe from this point onwards we will see the continuation of an uptrend, but still a valid analysis for the bullish trend. The euro pound downtrend continues as expected. This is the weekly chart. We might be testing the support within a week or two, the nearest support, and then maybe there will be further decline. Overall, it seems like there is a big downtrend formed, and we might be seeing quite a substantial decline in the coming months. The New Zealand Swiss franc, we also expect an upside move along with multiple New Zealand dollar currency pairs. And here we are in this support area or demand area. As long as it holds, as long as the price is above the 200 simple moving average, we should be seeing the continuation of an uptrend. New Zealand dollar against the United States dollar, we also expect the uptrend to continue. Currently price is testing the 200 exponential moving average, which has been acting as the support multiple times. Also, we see the higher highs and higher lows are being printed, and as long as the previously formed low is holding, we are expecting the move to the upside. Break, of course, and close below this support will invalidate bullish outlook, and then we could be seeing the trend reversal to the downside. New Zealand Japanese yen, also it's a long-term price perspective. This is the weekly chart where we expect the continuation of an uptrend, and this also seems like might be taking about 4 weeks in total, so 1 month for this move to be completed. So overall the New Zealand dollar seems bullish, Australian dollar seems very bullish, the pound also seems bullish, the euro is bearish. So this is the kind of big picture of the overall market, and we do hope that you enjoy the Australian against the Canadian dollar analysis. We would certainly appreciate your likes. Let us know down in the comments below what you think on this pair, whether you think there will be a reversal to the downside or the trend will continue. So thank you for watching. Don't forget to subscribe to our channel, click the notification bell. We'll see you again very soon. Take care, and we wish you profits.